Good afternoon. My name is Natalie Roy and welcome to this webinar introducing our cash flow product, Advisor Go. This webinar will be around 45 minutes and is a high-level overview of the functionalities in the software. If you do have any questions, I will let you know at the end of the webinar how to contact us. I do have my colleague Liz on as a panelist, so if there are any technical issues or something happens that you might not be able to hear me, you can just drop a little note in those questions box. Before I introduce the software, let me give you a little bit of background about Voyant. Voyant is a visually engaging planning tool which is used collaboratively with clients to help promote financial wellness. Voyant began life in 2009 in the UK, and our product now has a global outreach with bespoke versions available in Ireland, US, Canada, and Australia. It's a goal-based holistic financial planning tool designed to use in front of clients. It creates a personal financial plan for and mostly with your clients. It's a visual, dynamic, interactive, and collaborative tool where you can capture a client's current and future needs, goals, aspirations, fears, and pitfalls. The cash flow model allows you to analyze the likelihood of meeting your client's lifestyle objectives in a visual format. Voyant presents cash flow, assets, debts, net worth, and taxes in a series of visual interactive charts. A picture paints 1,000 words, and a cash flow model is powerful when used in a client-facing situation. The visual projection of the client's future will help to inform and engage and help them answer the 3 vital questions that matter most to the financial well-being of your client. Will we be all right? Can we live the lifestyle we want to? What happens if one of us dies early? A cash flow model will give your clients a picture they would not have thought about. Advisors find using a cash flow model has a much greater impact than just presenting a written report. Voyant can help advisors with the consumer duty requirements of consumer understanding and consumer support. And as an advisor, you will be able to provide that visual level of understanding by being able to present a quality financial plan, helping them understand their journey and what objectives are most important to them. The software helps you show them how they can accumulate wealth and, maybe more importantly, how they can enjoy spending it and achieving their goals in retirement. Voyant is the start and ongoing part of that conversation between you and your clients, and it shows the value of your advice. The ability to really understand what motivates your clients sits at the heart of a good cash flow plan, whatever age they are. Okay, so that's just a little bit of background about Voyant. Let me go into the software. The first screen when you come into the software is the Open Client Records screen, where the journey starts. Here will be a list of all my clients. And if I was a paraplanner, I could have access to all clients in the subscription. Let me cover what these headings are. Invitations relate to our onboarding tool called Client Go, where you can invite new clients to build a plan, or for existing clients, ahead of a review meeting, you can share the plan and clients can update fact-find details like expenses and income. They'll create a copy of your plan that cannot edit any work you've created. Sample clients, advisors are using this functionality to promote cash flow modeling to clients, incorporating some sample template plans. They might build a basic cash flow model for their accumulating clients and then have more complex sample cash flows that might include some decumulation and IHT solutions. Configuration. The software is hard-coded with all the UK tax and product rules, but it also comes built in with a preset of assumptions. It's important you come and review these and understand their impact and interaction in the software. In the software, you have the option to grow your investments accounts in two ways. You can have a fixed deterministic growth rate, which is this higher level growth rate here, or in this configuration, you can take a more stochastic approach by uploading your own model portfolios and market assumptions. This functionality allows you to customize and self-manage those assumptions and preferences at a subscription level, so they are consistent across all your plans, something compliance might like. Report sets, compliance might like this too. One can set standard report sets across all your plans, creating consistency in communication to your clients. In the screen are useful inline help tools to be aware of. Voyant is not your average support desk. You'll not get an automated email response from us, usually an answer within 2 to 3 business hours. But as well as our support desk, you've got some useful inline help tools. So if I just click into this little book on the right-hand side, it opens up onto a separate link where you can simply just type in what you're trying to do, and it will direct you to all the relevant guides and videos. And then you can just pop back into the software and continue working in the software. What you also have is in your little silhouette at the top right, I can see in my user preferences, I have an option to turn on inline help. You also have some useful preferences here around when you're presenting to the client. You have the option to turn your client list into privacy mode if you're in a boardroom situation. You can also turn off the dashboard chart, which can be quite distracting sometimes when you are presenting to the client. Okay, so that's your open client record screen. To create a client, you start here bottom right with this plus button. You can also see an option to import clients. We do have integrations with various back office CRMs to save rekeying of data. I'm just going to click Create Client to make you aware of why some inputs here have asterisks against them. Start date. Voyant works in planning years, a 12-month cycle from the start date. The easiest way for you to understand what tax calculation your plan will have is by the year you start the plan. So in this plan, it's 2025. So I'm going to have the 25-26 tax calculations. Retirement age. We'll create a default retirement event that triggers a lot of things automatically in the software, like stopping employment, stopping pension contributions. This event is also the event used to start drawing on all pensions in the plan. Okay, let's go in and let me introduce you to the client. In line with the thematic review around retirement planning, the FCA recommend you should be using a cash flow plan when modeling drawdown strategies. So this demo client is a suggested decumulation plan, and I'll be able to show you how Voyant can help you visualize a tax efficient plan in drawdown. I'm at the dashboard, and it's taking me to my current situation or base plan when you first start using the software. You always know where you are in the software by the tabs being highlighted in your top ribbon. The dashboard is the engine room command center of the software, projecting incomes, debts, investments over the lifetime of the plan. This is where you input all the fact find information, and all of this data that I have inputted here is via the little plus button on the bottom right. And you can see the software kind of gives you some tiles and some guidelines on adding your data. In the dashboard, it's also where I have set all the assumptions, delivering and affecting the outputs of the plan. So let's go in and understand further the brain behind the software. So I'm popping down to the bottom of the dashboard and I'm clicking into plan settings. These are long-term assumptions set around things like inflation, investment growth rate if you're using a fixed growth rate, earnings on income, and there are also some assumptions affecting IHT positions. I mentioned inline help earlier, where you see a dotted line underneath some headings. If I hover over the line, a question mark appears. If I click into the heading, inline help pops up, guiding you to articles and videos, if available, about what, in this particular case, this assumption means in the software. It's important to remember that a lot of these assumptions, in line with the budget, are frozen until 2030. But after that, they will increase by whatever you have here. Use inline help and understand how these assumptions interact in the software. Make sure they are credible, justifiable, and defendable for your client. A couple of assumptions to be aware of and to look at. Default tax table assumptions. Voyant builds in UK and Scottish personal tax rules and allowances. We've frozen these until 2030. Beyond that, we inflate those figures by whatever you have here in the default tax table assumption field. Assumptions affecting IHT planning, your nil rate band and your IHT property exemption. Frozen until 2030, but beyond that, they will inflate by whatever you have here. You may want to go cautious on your IHT assumptions. Historically, these assumptions have not fallen in line with inflation or tax tables. So you may want to take a more cautious approach here, particularly with the younger clients with a long lifetime of planning ahead of them. Fees and taxation, the interaction here is with your growth rates. So if, for example, I'm growing my investments by 6%, I have fees on my investments, I'll come back to what those categories mean, of 0.5, it means I'm going to have a net growth rate of 5.5 in the plan. Asset allocation and market assumptions. If I was taking a more stochastic approach, as mentioned earlier via the configuration tab, I can upload my own market assumptions and build in my own model portfolios. Voyant comes with the preset default market assumptions. You can see these haven't been updated in a while, so we strongly recommend and suggest you upload your own. Major loss, Consumer Duty is suggesting that one should have a volatility plan in the cash flow. The parameters set here will be used when modeling a market crash in the software. Liquidation order, this is the expense fulfillment. It affects the way the software draws out of investments when it needs to meet expenses. The liquidation order is completely editable. Let me explain further. Before the software gets to this liquidation order, it will use any habitual income first. So that's employment income, state pension, DB pension, etc. Once income has stopped or is not enough, it will then move on to anything in cash or current accounts. There is a way to ring fence those accounts for emergency funds or rainy days. Once income and cash are depleted, then this liquidation order applies to the investable assets. The reason you have the available accounts on the left-hand side is they make up this liquidation order on the right, this higher level liquidation order. Taxable just includes one product, unwrapped investment, unit trust, general investment account. The tax-deferred category includes pensions and bonds, and the tax-free category includes all your ISAs. When the software draws from the tax-deferred category, as a default, it will use the pensions and then the bonds. So this is why you have these available accounts on the left-hand side. I can click into my bond, move that ahead of my tax deferred category, and now I am explicitly instructing the software to use the bond first and then the pensions. Again, Inline Help is your friend here, so do click into the little dotted line and have a read more about the liquidation order. Savings order you can ignore, it's actually used in another version of the software, but calculation settings, essentially settings here affects the aspects of the plan when switched on. The key one I'm going to bring your attention to is this top one. Transfer all excess income credits to savings. By default, surplus habitual income is assumed spent in the software. We don't assume clients saves everything they earn. So if you did want to save some of that surplus income, you would probably have a discussion around increasing ISA contributions or increasing pensions. But if you wanted to bring those funds back into the account, you just toggle that button on. The other screen to consider, which drives some of the outputs of the plan, is the one just above your plan settings called Carryover Assumptions. This is the screen where you tell the software of anything prior that happened to the plan being built in Voyant that may affect taxes going forward. So for self-employed individuals, you may want some taxes rebate, taxes due in the year you're building the plan. The software is hard-coded with the current lump sum allowance. If your clients have protection on their pension and they can take a higher amount, you need to tell the software here, and it will override what is hard-coded. Also, inputs around pension carry forwards to maximize the 60,000 allowance. And for IHT planning, annual exempt gift allowances, and for your widowed clients, nil rate band and resident nil rate band carryovers. And you can record previous pets and CLTs. And if you like, offset any capital gains and losses against that great allowance we have. Okay, so get to know your inputs first, and then you'll understand the outcome of your plan. So I'm at the dashboard. I'm not going to analyze the charts here. There's a better screen to have a look at those, but I'm going to introduce to you what I have in the plan. I mentioned Voyant as a goal-based, holistic financial planning tool. So what we have in the software are goals and expenses. The difference is that an expense modeled as a goal is trackable. You can see I have these progress bars against those type of expenses. When we model goals and expenses, we model expenses whilst they're working as a normal expense. We assume clients can afford those expenses whilst they're working. But when it comes to retirement, we do want to track the progress and affordability of those expenses. Goals are powerful in the software. The visual provokes conversations around affordability. Do we need to spend less? Or good news, you can actually spend more. It works on a traffic system. A little traffic light, so it'll turn amber if we started hitting a shortfall. But using the goals, it gives you a little bit more information than an expense. Okay, and I've got a family in the plan just with a child. Each time you build a person in the plan, they each get their own little colors. Helps you identify ownership of things on the dashboard. And unfortunately, you can't change the colors. If Tommy is pink, Tommy has to stay pink, unfortunately. I've got some income in the plan, so they're both employed and they're inheriting some money from their grandparents. Default surplus accounts, these are default accounts created in Voyant for each person in the plan. They are not to be treated like the client's bank accounts. The purpose of these accounts is to save any lump sum inflows, like from an inheritance, an asset liquidation, a business sale. Those lump sum inflows are automatically saved to those default surplus accounts, and you can invest them via sweeping or transferring from there. I've got a property income with a mortgage. When you are entering, beg your pardon, let me just jump on my savings and investments. I've gone ahead of myself there for a second. Okay, in my savings and investments, I just have a mix of assets here. But here is that savings account that I want to ring fence. So I'm just going to show you how we do that, which is very common in the software, because the liquidation order, as I mentioned earlier, will use anything in these cash or current accounts. So you have this option called the withdrawal limit. It defaults to as needed, which is as needed in the liquidation order. Here you can interfere with that liquidation order and set a minimum balance. Scheduled only means anything that I schedule against this account will be honored and it won't be used for any other expenses. And in this case, it's completely ring fencing those funds, so I've chosen to do not allow. Now I can move on to the property. So my property incumbent with a mortgage. So at this point, I just want to mention, when you are inputting goals and expenses in the plan, you model your debt, you model your pension contributions, your protection premiums separately in the software. So think of the goals and expenses as the net amount. Keep it simple. How much do you want to live on once all your mandatory expenses have been paid? And we link property and debt so that when we have an asset liquidation, rental income or expenses fall out of the cash flow. Pensions, I've just got money purchase and a final salary here. These linked drawdown accounts are further defaulted accounts created by Voyant. They will have a zero balance if the funds are fully uncrystallized, and they're there to take any future planned withdrawals or crystallizations. And I have a state pension modeled as the state pension because we apply the triple lock in the plan. And then transfers, lastly, last bit of input, I've got a typical bed ISA transfer from an inheritance that we received in the plan. Okay, so the dashboard is where you are. As I said, I'll analyze these charts in a different screen. They'll have the same functionality. Timeline, let's go on to the timeline. This is where we are going. It provides a visual of the time frame of the plan, showing events, stages, and a variety of icons to use to bring the timeline to life. Customize your timeline and construct it in a language your clients will understand. It is a presentation tool. In line with the FCA, who have brought out some best practices using cash flow modeling, which is now a suggested requirement when modeling a decumulation plan, we'll be able to demonstrate in the timeline how meeting those can help you. So think of the timeline as the backbone and framework of the plan, because this is what it's all about. This is what's driving the clients to act, helping them to see the bigger picture, and all the time strengthening your relationship with the client. It is a presentation tool, so you can deselect people in the plan. In terms of the ages, you can see the ages here. So the primary client is at the top, the spouse is at the bottom. So if I was planning something for the children, I could just deselect the parents and be able to easily identify the children's ages to plot my events in the plan. So as I said, the timeline is where you are going, and it's becoming a focal point of discussion when using cash flow modeling. Because the FCA, as mentioned in line with the thematic review, have brought out some of these best practices. They include stress testing for longevity of expenditure, show different spending patterns of expenditure over different life planning stages and the priority of that expenditure, demonstrate expenditure patterns indexed with reasonable levels of inflation. So most firms have the default mortality age to 100 nowadays. To edit the mortality, I can just simply click into the event and change the age. You might get clients that say, you know what, none of my family have lived to 100. Most have died in their late 80s, early 90s. Can we make my cash flow a little bit more realistic? So in our training, we now plot the Office of National Statistics 1 in 4 mortality figures as events. So gone onto the website, had a look at their ages, male, female, and just plotted these statistic mortality events. You don't link these events to anything. Having these events on the timeline helps with that conversation around a more realistic mortality age. And should the cash flow show a shortfall around these events, it might not be a massive concern. Showing the different levels of patterns of expenditure. When you first start using Voyant, you just see a pre-retirement and a retirement stage. So I've broken up my stages by clicking this plus button bottom right. I've simply changed the names of some existing stages. So my pre-retirement stage, I've just changed that to working and saving. I've changed my retirement stage to a living the dream, and I've added a later life stage in the plan. So your timeline becomes a really good topic of discussion on where clients will go. It paints a story for the clients. We can see there are various events being highlighted. If we hover over them, it's collaborative and dynamic, so I can move. I probably can't move it on the screen share, but you should be able to drag and drop various events in the software. We also, in this timeline, have some special events around protection planning in the software. And when you're modeling a major loss, it's the special event you use, which will bring over those parameters from your plan settings. So just some useful events when you are modeling protection in the software. Okay, so timeline is where we are, dashboard. The timeline is where we're going, the dashboard is where we are. From the let's see, it's all analysis. So this is where you start introducing the charts, and it's just a bigger version of the dashboard. So let's bring things to life. Details brings in my colors. I have this legend I'm referring to all these little headings which help you understand what the colors mean in the software. Automatically in my let's see, it's turned on, but if it's not, it's just your three little dots to turn that on. If I was presenting and explaining the cash flow to the client, you have this little option to hide all in the legend. This is the shortfall, this is everything that we've got planned for, and you can now start building up the cash flow in front of the client. Click on your basic need line. Basic need line includes all expenditure categorized as basic, your mandatory expenditure like taxes, protection premiums. The black total need line is everything, all that expenditure, discretionary, basic, and mandatory. They're still working, so I'm going to toggle on the employment, and I might have a discussion with them at this point around the surplus income that's earned on an annual basis, and ask the question, is the expenditure correct? Other income, that's our inheritance, lump sums that are coming into the flow. That's that spike that we can see coming in. When we get to retirement, the only guaranteed income we have is our state pension. We have a DB pension scheme in the plan coming in the green. But for the rest of that, our retirement, in accordance with that liquidation order, we are using the liquid assets. So savings and investments first. I've got my taxable. And then we move on to the money purchase in the plan, which makes up the bulk of our retirement income. Year view. Year view is where you start interrogating things in the software. It gets you underneath the bonnet of the charts. You have a square at the start of the plan that activates a slider bar, allowing you to view items around cash flow, expenses, where those expenses are paid from. This level of detail would be for your eyes only. Your investments and your pensions give you a lot of information, end of year balances, growth rates, and any withdrawals or contributions. We often get on Voyant support, how do I know my plan is working as expected? It's this year view. This is your sense checking tool to check all your inputs. So for example, if when I want to go get to retirement and I wanted to understand how the software is drawing on my money purchase pension in the plan, I can click into the pension. I can see the withdrawals occurring. Another layer behind the scenes here. And I can see that as a default, the software takes F+ withdrawals in the plan. What it also does in the plan, it draws from the primary client's assets first, if the expenses are jointly owned, and then we'll move on to the secondary client's assets. So staying in our year view, what that invariably does is put the primary client in a higher rate tax position. That's the default of what the software does. And this plan is to try and mitigate and share that tax position over the lifetime of the plan. So year view, I'm just going to pop one back into that. As I said, is where you start analyzing all your inputs in the plan. Also, in these three little ellipses is where you can view charts in real money. So you'll probably be looking at assets in this position. Details is a bit busy for the assets. So you have the opportunity to view your assets in real money by that little functionality. Okay, so it's important to remember cash flow modeling is not a budgetary tool, it's not a tax planning tool, it's not an investment management tool, but it's indicative of all those things. The software does not give any form of advice. One would need to model an efficient tax planning strategy in the drawdown. So let's start analyzing things a bit further. We now have our dual chart. And our dual chart allows us to view two charts in one plan. My current position at the top, or my base plan, as will be familiar to you. I don't have my legend on here, so I want to turn my legend on. Turning the legend on allows you to get quite granular if I'm presenting to clients. For example, if I just wanted to look at the liquid assets position in the plan, I can toggle that purple dot off and have a look at the starting position in my liquid assets. I can flick through the various other positions around taxes, around expenses. I can have a look to see what my living costs are, excluding my taxes. You've got a debts chart to show you when your debts are being paid off from a visual perspective. And you've got net worth and plan worth. The only difference between these two is one includes trusts. And the taxes gives you a nice level of detail of the types of taxes and year on year a cumulative position in your plan. So your let's see is where you start analyzing everything and start interacting with the charts and positions in the charts. I'm just going to pop myself out of real money. I'll come back to the compare plans, but let's cover some of this other functionality. Overview are simply that. They are overview one pages showing your balance sheet. And there's a little slider bar concept again. Income and expenditure in a nice tabulated format. And here is where you start IHT planning. So the software will give a simple view showing the liability at death. You have other scenarios to model, planned legacy, both die today for gifting purposes. And to understand the calculations behind the scenes here, it's these little dots and dashes that you click into. And you'll be able to see all the total wealth transfer calculations in your plan in this screen. You also can have a comparison view when you are doing IHT planning to understand what you've modeled is working. This is not an IHT plan, so just showing you that functionality. Insights. These are simulations and they run algorithms outside of your plan, designed essentially to help you as planners and advisors come up with strategies around mitigating shortfall. So you have annual savings. How much more do I need to save to mitigate that shortfall? Can I take more risk? Maybe for your younger clients, they can take more risk to mitigate that shortfall. A lump sum savings, how much do I need to downsize by? How much do I need to sell my business for? You can look at the IHT position in the plan. We also have in these insights, for a more stochastic and sophisticated approach to stress testing, have the historic and Monte Carlo simulations. Loss capacity will help you determine how much can the clients gift away without losing any money. So as I say, they were designed in front of a client. You could be sitting with a client and say, I just want to have a look to see what my plan would look like if I had a market crash at 60. And straight away we can see, if we go to the assets chart, come out of details for that, I can see my major loss settings where I've got those parameters built in my plan settings. I can see the difference in the asset position and the client would still be okay. The other popular insight is the retirement spending insight. Very common question, how much can I actually afford to spend? So for some clients who possibly do not have a downsize opportunity, they cannot save anymore, they have no extra money coming in, this can maybe give a bit of a reality check in terms of what they should be spending. And indeed for clients that have a lot of money, it can reassure them they can spend a little more. So what this algorithm does, it gives a maximum spend, bringing the liquid assets to almost zero in the plan. And what the algorithm does, if I just click to year view, it's a retirement spending. In my expenses, it produces a spending analysis expense. So I can be spending in total with all my mandatory payments around 147,000. What am I actually spending in the plan? So we can click compare to plan. Double click, which is just a quick way to get to year view. And in fact, what we're spending is around 131. So they could spend a little more. This insight can also help with gifting around annual gifts in the plan to check affordability. So those insights are really good little algorithms, as I said, designed to help you as planners come up with quick solutions. And when you run those insights, you will then create some what ifs on the back of those perhaps. So let's segue to what ifs. In this plan, this is a decumulation strategy. So what I have, the objective was to retire early. So the first plan I created was retire early. And all I simply did here is I moved their retirement umbrellas to age 60. And even with them retiring earlier at age 60, we can see they are still on track to meet everything. In this plan, I also kept the liquidation order the same as my first plan. Because when you're modeling a decumulation strategy, sometimes just changing this liquidation order can start put your clients in a tax efficient plan. So the strategies that I created was one, the first what if, was looking at retiring the client early. And I just changed the liquidation order to have my bond coming in and my pensions last in the plan. So I just changed that liquidation order around a little bit. Let's have a look to see, as a starting point, without changing how the software is drawing assets, what that looks like. So I'm just going to go apples for apples here and just go to my retire early, not changing the liquidation order, and my retire early and changing the liquidation order. So from a cash flow, we saw blue, that's okay. What are we looking like from an assets position in the plan? And I'm just going to total off my non-liquid assets. If I hover over the plan, you can see we're starting to put the clients in a higher liquid asset position. Let's have a look at the taxes. Again, if I hover over towards the end of the plan, we can see we're starting to reduce that cumulative position from 700 to 554 just by changing the liquidation order in the plan. I went a step further and I created a further plan where, let's go back to my dashboard so it doesn't reveal of the day around the taxes, and I created another plan called Use Assets Efficiently. In this plan, and when you are modeling a decumulation strategy in Voyant, we use what we call a series of planned withdrawals. So I've changed my liquidation order, but that's still, I feel I could put the plan in a better tax position. So via this little plus button and planned withdrawals, this screen allows you to be strategic with income in retirement and override how the software is drawing, for example, from pensions. You can set pension strategies where you can have just tax-free cash or a different set of F+ withdrawals. So that's all I've done. That is what I have done in this plan. I've set up some withdrawals to maximize his personal allowance up to state pension age. I've also set up a different set of F+ withdrawals to maximize her personal allowance via a different set of F+ withdrawals. I've brought in the bond in the plan for a 20-year period. I've also set up some ISA withdrawals from both of them, an equal amount over the lifetime of the plan. And because you remember that we draw from the primary client's assets first, what I have done is I've brought in some of her tax-free cash a little bit earlier in the plan, and also some of Sarah's drawdown later on in the plan, because once all the tax-free cash is finished from both of their pensions, it'll just kick in to use his drawdown. So I brought in some of her drawdown later on in life. So essentially, a decumulation strategy is just overriding how the software is drawing assets in the plan by possibly using a crystallization, which you may do to pay off a mortgage, and planned withdrawals. So let's have a look at the result of this planning. If I go to my Let's See, come down to chart view. So let's change our plan at the bottom to our Use Assets Efficiently. And I'm going to change my top position to my Retire Early and change the liquidation order. So the bottom plan, change the liquidation order and change the way the software draws on assets. So the top plan, change the liquidation order. The bottom plan kept the liquidation order as per my top plan, but I changed the way the software draws on assets in the plan. And you can see, obviously, the colors look very different. So from a cash flow perspective, all is good. What is happening from an assets position? If I click into my assets, toggle off my property, and we can see we've increased that liquid asset position. Most importantly though, this is decumulation, so what have we done from taxes? And I can see here, overall, we've reduced that position down from 600 to 420,000. AdvisorGo will give your clients a picture that they wouldn't have thought about, helping you to demonstrate an efficient tax planning strategy in retirement. You can see here, in their living the dream stage, we've reduced their tax position quite considerably, and that's quite a nice picture for the clients to see. I'd much prefer be paying my taxes in my rocking chair days. Okay, I'm going to be ending off now. So reports, I've got a pre-generated report here, so I'll just show you what a typical report looks like. All the reports are in PDF. You can convert to Word if you want to add your logo or anything like that. if you don't have white labeling. So I've got events and goals as a starting point. Nice to start off with this report. It's where we're going. You can discuss the time frame of the plan. And of course, I'm using goals, so they're visible on the report. It doesn't really look, if you aren't using goals, it says no goals at retirement, which doesn't look ideal. Then I've just got a simple financial summary, one pager showing me my mix of assets. By now, hopefully you've presented to the client so they will understand what those colors mean in the software. And you've got some insights included in that financial summary. The only detailed report I've got here is the assets, just to show the overall asset position, and then year on year, those assets being withdrawn and the balances. Then I come into an audit trail, my balance sheet, and then the plan, facts and assumptions. So this is what the FCA will like, giving you all the level of detail around growth, planned withdrawals, anything that has happened on those plans and accounts within your software. Last thing I'm going to end off with is just to remind you on how to get hold of us on support. Within the plan, for data protection, we don't have access to your plans. So to give us access, you click into the name of the plan and just go request support. And you can just type in help. Share the client with us, gives us a chance to have a look at your plan before scheduling a phone call, and also gives us that permission, as I said. You also have the option to update and promote your plans. So when it comes to review time, this manage plans and update and promote option, just to remind you, will bring your start date forward. And all your previous plans are locked for comparison. So they will show as read only in the plan. And our support desk is open up from 9 to 5. So the last thing I'm going to mention is, if you do want to start a trial, please go to our website and click Start a Free Trial. Thank you all for attending today, and thanks for your time. Bye-bye.